Hello, in this lecture we are going to focus on management-defined performance measures. This is the new requirement in IFRS 18, and we are going to illustrate the disclosure of those measures in the notes. So what are management-defined performance measures? These are subtotals or totals of income and expenses that meet three conditions. Number one, they are used in public communications outside of financial statements. Number two, they communicate management's view of some aspect of the financial performance of the entity as a whole. And number three, they are the subtotal of income and expenses, nothing else, but they are not a required subtotal or common income and expense subtotal. So let's break down these three. Number one, management must communicate these measures clearly in the official public communications, which are press releases, management commentaries, or investor presentations. Such an official communication would point out that the measure is MPM or management-defined performance measure. However, we're not speaking about a social media post or some oral presentation. So if the management communicates some measure just on some social network, it's not MPM or management-defined performance measure, and it does not need to be in the notes. As for number two, IFRS 18 assumes that if the measure is publicly communicated outside financial statements, then it surely represents management's view, unless the management proves otherwise or rebuts this presumption. Number three, these are not subtotals or totals already required by IFRS 18. Of course not, because those required by IFRS 18 are regular numbers that we need to present in the financial statement. So, as examples, gross profit or loss and similar subtotals like net rental income, operating profit or loss before depreciation, amortization, and impairments, operating profit or loss from investments by equity method, profit or loss in investing category, and those would be all income and expenses reported in that category, profit or loss before taxes, or profit or loss from continuing operations. Those are not MPMs because those subtotals are either required or permitted by IFRS 18 to present in the statement of financial performance anyway. So what are the examples of management-defined performance measures? Adjusted profit or loss, for example, adjusted by non-recurring expenses like restructuring. Adjusted EBITDA. Even EBITDA might be this measure, but only if it's not the same as OPDAI or operating profit or loss before depreciation, amortization, and impairments, because that would be subtotal included in IFRS 18, which is specifically not MPM. Adjusted operating profit only, or adjusted profit from continuing operations. So all kinds of those adjusted measures, but remember, which are publicly communicated outside financial statements, right? What are not MPMs? Well, subtotals of only income or only expenses, as MPM is really on a mixed basis, income and expenses. Then assets, liabilities, equity, or combination of those. Financial ratios like return on assets, because this measure is mixed, contains also assets, not only income and expenses. Liquidity or cash flow measures like free cash flows. And of course, non-financial performance measures for example, number of followers on social networks. You can communicate those publicly, but they are not management-defined performance measures in IFRS 18, and therefore you do not need to work out all those necessary disclosures for these measures. So what to do once you identify that you have management-defined performance measure? You need to disclose certain information about all of your management-defined performance measures in a single note in the notes. So what is the disclosure? Now, let me tell you and show you on an illustration straight away. First of all, the entity must state that management-defined performance measures provide the management's view of an aspect of the financial performance of an entity as a whole, and that they are not necessarily comparable with measures sharing similar labels or descriptions provided by other entities. So let me get back to the example of the notes and show here. The note 4 is dedicated to MPM. So here you can see that it says that the group uses two management-defined performance measures, adjusted operating profit and adjusted profit from continuing operations, and that they are not fully comparable with other entities. Next, we need to provide certain descriptions of those measures. There must be understandable label and description of that aspect of financial performance which is communicated by the measure and why. So let's get back to the note illustration. Here you can see that there are clear labels: adjusted operating profit and adjusted profit from continuing operations. And also it says that the group's management believes that these MPMs provide information that is helpful in understanding trends in the group's underlying profitability. So here you have that aspect, profitability, and why, understanding trends. Of course, you have to think of the specific circumstances of the specific entity. Next, you must state how MPM is calculated. Again, here it says that operating profit and profit from continuing operations have been adjusted for items of income and expense that the group does not expect to arise for several future annual reporting periods. And then there is a full paragraph describing it more precisely, which items have been added or deducted to subtotal reported in profit or loss. Here we have impairment losses and gains or losses on disposals of property, plant and equipment and intangible assets. Here I stress that this depends on the specific entity. Then we have to provide certain numerical reconciliation between management-defined performance measures and the most directly comparable subtotal or total or subtotal specifically required to be presented or disclosed by IFRS accounting standards. So that number that you see in profit or loss statement. Let's see here. This reconciliation is in a tabular format. I totally made those numbers up to illustrate, and this is just one acceptable format, so you can choose your own. Here we start with operating profit reported under IFRS accounting standards in the statement of profit or loss. And then you go to the right columns and see the adjustments for impairment losses and gains on disposals of property, plant and equipment. And thus we arrive at management-defined performance measure, in this case adjusted operating profit. And the same applies to the line below. Profit from continuing operations is reconciled to adjusted profit from continuing operations. It's also necessary to include in that reconciliation the income tax effect and the effect of non-controlling interest for each item in the reconciliation. So let me show you. We have income tax expense line here. So you can see it affected only gains on disposals of property, plant and equipment. And then in the last line, we have the non-controlling interest part. Finally, we need to disclose description of how we determine the income tax effect. And we have that description right below the table. Also, please note that this was reconciliation for the current reporting period only. But we need to present comparative information, so we need to present the reconciliation for previous reporting period too. Now let me tell you that all this disclosure must be audited if you have your financial statements audited, and it is because it's official requirement of IFRS 18 and is a part of the financial statement. So maybe it would be good to reconsider what management officially communicates outside financial statements and whether this communication meets the criteria for management-defined performance measures that you need to report in the notes. That's it for today. Please like this video if it helped. Hit the subscribe button and notification bell to stay tuned for more. And if you need to learn IFRS more deeply, then check out my free newsletter on cpdbox.com. Thanks for watching. Bye.